GM. So today I don't see too much by way of decent trades here. Obviously, there are some great trades that could set up. I'll give you two exact trades that I will take. Well, I might just take one of them. You'll see in a second. If Ethereum retests the value area, the old value area high, and fails, I will trade it with a target down towards. So I'd wait for the retest. Once there's a candle close confirmation, I'd have my stop somewhere outside the value area high, trade it down to the value area low. And exact same for Bitcoin. Bitcoin has much more of a move to actually get there, and then same thing. Right? So they would be two of the ones I would trade. BTC has a weaker chart. It's got a lower point of control, more distribution up here. It might not reach that value area high as a result, but that would be one of the trades I would look to take if the opportunity presents. Outside of that, let me just put that on as a value area high. I want to look at yesterday's video. So yesterday's video was like a mini lesson. If you haven't seen it, check it out. It's about trading news. And I mentioned about when the news comes out for CPI, which happened at 12:30 UTC, as it always does, how to trade it, how to focus on actually trading the news. So what you want to do in general is wait for some consolidation to happen after the news. That news came out and inflation was lower, and everyone tells you inflation lower is good for the markets, and that should have been the response. So what I preached yesterday, which I'll preach again and again and again, is do not try to interpret the CPI news. Don't try and front run it, right? Don't try and get long before the data because you think, oh, well, if it's good, it's going to pump. Don't try to, when you see the result at 12:30 or whatever time it is for you, don't try and take a trade right there and then. Oh, it's lower, bullish, buy. Because the markets don't react to the news in the way that the consensus would expect. There is an expectation of how price should move, and actually the most edge you'll have, the biggest alpha you'll see, is when there's news and you think it should go one way and then it doesn't. That's a big sign, and that's exactly what happened. Right, we had our initial pump, and then immediately price fell back, filled in all of the gap, so basically filled in the entire thing within the next hour, couple hours. And from there, that was your clear sign that we're going lower. One of the trades you could have took was this break of structure here, right? That would have been your entry for a short. So you wait for the pump, you wait for some kind of consolidation, which this was. It fell back, but then it held, and it held, and it held. So it's consolidating at the lows, and then it breaks through. I mean, that's a classic support resistance. You move up, bounce, bounce, fail. You enter the short. And that short went all the way down and down into the lows. Now it's probably low time frame, seeing some absorption. How I trade it was around one of the candlesticks specifically. Once we got this reversal green candle here, you can see after the pump up, a couple of bearish candles, and then the next candle tried to reverse and be bullish and was unable to. When that bullish candle failed and we had a breakdown through it and a retest, you can see multiple entry points for shorts on there. Right, that's another way of interpreting it, where you allow the first candle, next couple of candles to happen, and you're trading it in the direction that you think it's going to go now, because the direction here for sure should be down, right? Bearish reaction to the news, failure to rally on that green candle, then it goes lower, and you can trade that with your invalidation set above there. It shouldn't go there, and that can get you a slightly earlier entry. There's a million different ways you can trade these. The most important thing, just like with anything, just like when you ask about, should I use the wicks or the candle closes for my ranges? People ask me that question. The answer is always either of them. But the one you choose, be consistent. So if you're going to trade post-news and you're going to use the fourth candle, or you're going to use the entire consolidation, or you're going to use the bottom of the initial candle, right? The bottom of the impulse candle, that when that breaks, you get short. Or, of course, if it had a broke bullish, you get long. It doesn't matter. The way you figure this out is to test it. Go and look at the last X number of events. Try different things. What happens if I short below the low of the impulse candle after it closes and I long above the high? What happens if I short above or below the fourth candle? What happens if I short above or below the next 1 hour? So you take time, you take 1 hour worth of consolidation, and then when it breaks the lows of that consolidation, you short it, or you long the highs. Try different things out. The main thing is you have a consistent process for how you apply it. You're disciplined in that, and you don't do anything else, right? You don't allow your opinion to come in. Oh, well, no, but this time I know my trigger hasn't been met yet, but I think it's... No. You just trade when it tells you to trade, and that's it. And that will allow you, over time, to win. It's incredibly easy to win with these economic data events. Incredibly easy. I was talking to Mighty Nico yesterday. We both took practically the same trade and had a 6-7 hour winner. From shorting it after that trigger all the way down, I ended up closing it. Where was it? Closing it at these lows, because before I went to sleep, it was looking like it was holding at some kind of a local low. And of course it went lower after. It doesn't matter to me. It's just a day trade. Down, 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 and down, close it. When I say it's incredibly easy, every time you see these data events, if you go and look at 50 of them, you will see there's always some kind of big move. Whether it's straight away, whether it's a few hours later, whether it's even the following day. There's always some kind of significant move on a lower time frame that happens after the event. All you need is a fixed set of rules that whenever there is a clear move, you'll be in it. Not every week, not every month will you be in the move. But every time there's a big move, you should be in it. That's the point. Next month, I'll run this exact same strategy. I might take 2 stop losses. Might get stopped out once, stopped out twice, and that's it. Cool. Then I just wait for the following month. But over time, the accumulation of many, 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 many trades will put you ahead. GM.